The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 10th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. You can send me an email, steve@tfnn.com, as well as ping me inside of the Tiger's Den. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trading up nearly 200 points, trading out at 18,785. S&P up 6 at 2169. NASDAQ Composite down 39 points. The Russell 2000 up 23. So a little bit of a divergence here. You know and I know that bull markets are best when you have the Russell 2000 out in front. And we do have the Russell 2000 out in front. You like to see the NDX specifically, or at least the NASDAQ, trailing right behind, and then just simply dragging the others along, the S&P and the Dow. We don't exactly have that here today, but markets don't careen to the downside with the Russell 2000 heading north. So we'll make sure that we go take a look at the Russell 2000, where it's likely headed to, as well as the rest of the market. Anything you'd like to look at. You've got gold trading back $7. Silver's up 34 cents. A little bit of divergence there. You've got light sweet crude back 50 cents. Bonds are trading slightly lower, leading the charge here to the upside. It is Chipotle Mexican Grill, up 6% plus, $23 and change. Affiliated Managers Group up 8%, $11. Regenerate Pharmaceuticals up 11. Sherwin-Williams painting the town green today, up $9 and change. To the downside, Amazon, which I believe is now in an A to B equals CD to the downside. Volume today about 9 million shares, so we'll take a look at that for sure. Google down $23. Priceline off 22. That's why we've got some struggling inside of the NDX 100. So we want to take a look at that. Domino's Pizza, one of those stocks that has just been, I don't know for sure, but it's pretty close. Or it is maybe certain. Domino's Pizza is one of the better performing stocks since the, not the best. I'm not sure who the best is, but Domino's Pizza since the March 09 lows, way outperformed percentage-wise. Most of the stocks out there. In any event, today it's pulling back for whatever the reason's down about 5%. So if we and I see the market just ticked up to the upside again. We're above 216 now inside of the Dow. So I don't know where. So let's begin. Let's begin by taking a look at the Dow. Try to figure out where it is headed to. Now let's do this. Because, first of all, you can see the A to B equals CD pattern out here, right? So if we take a look at the daily chart, what you and I are going to do is go down to the Brexit low. That makes a lot of sense. That's the Brexit bottom down on the trading session of June 27. We'll come up to the B point out here when the Dow made a high on August 15. And the retracement was basically down into, last Friday, right? So we've got the A to B, we've got the C formed out here. And that says that where the Dow could be headed to, only about a 50%, just slightly less than a 50% retracement out here, that the Dow could easily head to 19,488. Actually, the more likely scenario scenario is that the Dow would do more than a 1-to-1 A to B equals CD to the upside. So that would give you a price target of 19,925. You and I have looked at the horizontal trading ranges, and what we know is that the setup here over the long haul, because that because the 18,000 level held the support, continue to be tested, that the next price target is 20,000. So you've got an A to B equals CD daily basis out here that is giving us a price projection to 19,488 and 19,925 level. But let's change this to the diamonds. Let's go ahead and add volume out here. Let's go see what the volume characteristics are. And let's change this to a weekly chart and see what we've got here. Oh, how about that? I didn't even know that that was in there, but it is. I'm not even sure where it picked that up. So if we take a look at the actual B point that I would use here now, in this A to B equals CD pattern, we're looking at the week that began April 18th. I'm assuming that was a 5-day week. The volume there was 13 million shares. And 13 million shares was passed with 15 million shares the week that began July 11th. So what we have inside of the Dow Diamonds is a confirmed A to B equals CD to the upside. And 197 to 204 becomes its price target. So this week is, volume so far this week, 21 million shares, right? And this thing, it only really needed 13 million shares to get beyond the B point. So we just have what we'll call double Guy confirmation of an A to B equals CD to the upside inside of the Dow. Now, let's do the same thing with the Russell 2000. Let's go take a look at it, see what kind of message. Let's stay with the weekly time frame charts out here. How about that? I didn't even know. Really, I didn't know that maybe we had already done this once before. Now, the B point in the IWM, Russell 2000, again, weekly chart that you and I are taking a look at, down here, February 8th, right? So that was the low of this year. The B point's going to be the June high. Then it does a little retracement down into the Brexit low, 40% retracement. That's actually very bullish to the upside. Now, volume inside the IWM was 132 million shares, and that was exceeded with 142 million shares the week of July 11th. This week we're at 110. Does it matter what we do this week? Not necessarily. But what we have here is a confirmed A to B price projection. In fact, we could do a smaller one. The volume that would need to be taken out, which is going to occur, is the volume from the week of September the 5th, right? Let's see. 125.44, was that it, or was it this one here? 125.88. 132 million shares. If we use that as the B point, September 19th. And you're at 110 million shares. What does this do average on a daily basis? Here the IWM does 18, 17, 20. So figure it's got another 30 million shares or so. So it looks like you're going to have another double confirmation out here of A to B equals CD patterns to the upside inside of the IWM. Again, that is important because when the Russell 2000 is out in front, everything is hunky-dory. We got to figure out where hunky-dory actually comes from as well out here. So that's what okay, yes, I will do the SPY. What does the SPY look like? We'll just have to do the SPY when we get back from this commercial break. But I'll tell you, it's already programmed in here. SPY headed to 230.08. It, too, has a confirmed A to B equals CD to the upside, folks. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now, what we want to. So we have confirmed A to B equals CD patterns to the upside. We take a look at the ETF structures out there. Pass and B points with volume, shallow retracements in essence off of the February lows up into the highs in August or whenever the highs were made for the specific ETF or indice out here. And it's important to always know what the undercurrent is. And the undercurrent is really this top chart here. I don't have where I normally have these charts, that workspace open. And so, but I want you to really focus on the top portion of the chart here. That's the seasonal cycle. That's the one-year seasonal cycle, which typically makes a bottom in the middle of October. During the election year, such as a second-term president and other things, it's towards the end of October. But remember, we use this as a guideline. We look for patterns that are going to form right around the areas where these cycles complete. And look, so that is in essence what has taken place. That took place last week. So October 13th, by the way, the Dow did make a bottom. The market moved higher. Then we saw that low get taken out just simply to form a Gartley buy pattern. So that's the pattern that is in play. Now, look, what I was giving you, what we were taking a look at, were longer-term price projections. And if you look at the bottom that forms here on a cyclical basis, on an annual basis, it's not a straight line to the upside, right? You see the markets pull back, retracements and so forth, right? A little bit back and forth. So you should expect the back and forth. And the reason that you want to is you should be looking for places to enter the market. That then takes us to shorter-term time frame charts. Now, you can decide whether you want to play both sides of the market. This has been a great market out here for quite a period of time to play both sides. I don't see why that really would change out here. But know that you're better to have your gunpowder ready for the long side. Now, in order to take a look at where the market is headed to, right, we know that what we didn't take a look at was the NDX 100. Well, we probably should do that. Let's just look at the QQQ series ETF. Let's do that. Just to try to finish this off and then take another step and look at the intraday charts out here. So we can see the struggles that the Qs have had today. But if we look at its A to B equals CD pattern, we take a look at its low out here. In essence, the way that we would have to do this properly, see how the swing point here, this is the way that I would do it properly, the swing point from November 4th That low was 113.45, and that low got below 113.63, which was the low from September 12th. So that really says that our B point has to be, in an A to B equals CD world of utilizing that tool, the October 10th level out here. So it would look like this, and that means that we do not have a confirmation. Well, I don't think we do. Let's go see if we do. Well, here we're going to switch this to the weekly in a minute out here. But certainly on a daily basis, we're not beyond the B point. Now, that B point had 19 million shares. When price got up to that level, it was about 19 million shares as well. But it never really closed above that swing point. On a weekly basis, let's go take a look at volume. So you've got confirmations in IWM, Russell 2000, in the S&P via the SPYs, and the Dow Diamonds out here. And if we take a look at the volume from that week, that high that was formed out here in October, that's 114 million shares. Now, you're pushing into that swing point with volume this week. So if we take a look at the message of the weekly chart for the Qs, even if the Qs were to close below the low of that swing point, 116.74, you're already pushing into it with volume. So what we know, what we have learned, is that when you're pushing into a swing point with volume, you're going to get back up there and test it. Now, test the low of that, could be, which would be 116.74. More likely, it's going to go ahead and test the high. Now, you close inside there with volume. That says you're going to go test at 119.66. So we have a bit of divergence in between some of the ETFs out here. And the Qs, we have to keep a close eye on because they can really be the Debbie Downer. And my apologies to anybody named Debbie out there, just using that as you know, we call it Stevie Downer. Although, when have you ever heard me be into the downer side out here? But you know what I mean. They can spoil the party out here. And so we do have to keep a close eye on the Qs. So the segue into, why don't we look at the intraday charts out here and see what kind of message we can get. In doing so, let's look at the intraday charts, the 30-minute charts for each of these equity futures contracts out here. We're going to go look at this chart. Here's our 4-panel chart now that pops up on the screen. ES Mini left side, upper left side, NQ upper right, Dow lower left, Russell 2000 lower right out here. Now, the interesting thing with regard to the NQs out here, let's go see. So you can see one there below Stevie's red line, which is 47.95. Not really a good idea if you're a bull to trade below that, but nonetheless it is. We should take a look at the retracements. So we're doing all this live. I haven't actually done this. I'm just going through the same steps that I would do if I were going to evaluate what the Qs are doing. But same. So I guess my suggestion there, these are some of the steps. You don't have to do them in this order with regard to how you would go ahead and evaluate what's going on. Now, interestingly enough, for those of you that are Sweet 618 aficionados, and you know the folks in Clearwater are because they are sitting in Sweet 618. So 618 means something to us here at TFNN, and you can see that from low to high, meaning from 45.58 to 48.79, all that the NQ 30-minute chart did was a 0.618 retracement, a normal place because you can see a wide-ranging bar cruising right through that 0.382 level. Oftentimes that can be where you let traders off the elevator, but clearly there were no traders on the elevator at 0.382 because the market just careened right through it. You couldn't get off until you got to the 0.618 level. So that's the first thing we know. That could set up the C point of an A to B equals CD to the upside. Could, would, should. We won't know if it will. It's got a better indication that it will do that if it can get above and close above 47.67 and then 47.95 out there. And then, of course, you're always looking at the top of the wide-ranging bar, which is around the 48.18-ish type area out here. Now, if we look at, so what is it that we know? So far, the retracement is nothing more than a normal retracement and a big, huge move to the upside. There is no other pattern out here on a 30-minute basis for the Qs to give us any indication as to whether this is a bottom, or is it really trying to set up maybe a retracement to form an A to B equals CD to the downside? And that's what I don't know. I wish I could tell you that that's what it was doing out here. That would give us a pretty good piece of information. We can see that the retracement to the upside since this morning's action, right, we can see that it has gotten to elevator floor number 1 on the way up. 47.55.84. It's actually hit a bit higher than that, but you're trading at 47.49 versus 47.55. So the level that we took a look at, the top of the TAS market profile, which is 47.67, is going to be key. If you get above that, then where price is going to head to, or should head to, 47.95 to 48.03 would be the next move. You get back above that, then the A to B equals CD to the downside starts to get a little weary and dreary out here, especially in light of the fact that you got the Russell 2000 and Dow, doing the things that it is doing. And then, so speaking of those, let's go take a look at. So again, on the NQ out here, as I put this up on the screen, you can see Stevie's oscillator and change line pretty much right above at right at that 47.67 level out here. So the NQ is kind of a wild card. Made a nice topping pattern, nice little price RSI pattern. We'll take a look at the other 30-minute charts and anything else you'd like. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So a question that came in, Steve, do you think that the NQ will get to that 47.67 level? So if we step back, and the answer here is yes. Now, it's not that I think that, it is that the market thinks that. Now, how do we know that the market thinks that? Well, if we take a look at these, let's assume that these four equity futures contracts. In his case here, we're utilizing a 30-minute time frame. You know, they're all part of the same group, part of the same party. They're communicating to you and I. And if we take a look at our TAS market profiles, right, upper left-hand corner is the ES. Lower upper right-hand corner is the NQ. We know that. Lower left Dow, lower right is Russell 2000. First, take a peek at the lower left, lower right. Right, price is above the resistance zone. It's TAS market profile high inside the Russell, inside of the Dow. That's positive. That's bullish out here, right? Those higher levels are only support. They never failed out here. The Russell 2000, even stronger than the Dow, quite frankly, right? When the Russell 2000 is number one and out in front, it has basically one meaning: very bullish for the overall stock market. Why do I say it is stronger than the Dow, believe it or not? Well, in utilizing our market profile information, its most recent market profile formed above the prior one, whereas in the Dows, it formed inside the prior one out here. So for me, that interpretation is, hey, Russell 2000 is strong like bull out here. Now, with regard to the ES Mini and the NQ top panels out here, their new market profiles that formed a couple hours ago formed below the prior ones. Not a good bullish message until resistance fails. In the ES Mini, it moved above there at about 1 o'clock. We're now into the 1:30 session, really about 12:30 or so. By the end of 12:30, price had moved above it. That is now bullish versus bearish intraday. Okay, so it says price ought to continue to move higher. That would then say to me, these three will go ahead and lift this boat here, the NQ, at least up to that 47.67 area. You clear that, then the 47.95. So that's for the intraday traders out there as far as patterns to take a look at. Now, what do we want to look at with regard to the end of the day out here for the bullish message to continue overall, in order for there to be unison, in order for us to be singing and not one of us be out of key here? Well, that would be this chart here. You see the NDX 100. We'll take a look at these being the big four, right? You got the big three out there in the automaker area. And inside the market, we really got the big four. There's others out here, but these are the big four. S&P 500 up top. Down below that, the Dow Jones Industrials. Below that, the Russell 2000. And then below that, the NDX 100. Right? Each of these are ETFs that you trade, typically would trade, whether it's a 1-to-1, a leveraged one, a 2x, a 3x, whatever. Soon they'll create a 4x out here. 4x. Oh, they do have 4x already. That's why they don't have a 4x, because there's already 4x out there. In any event, it's the Stevie red line that you want to pay attention to. 47.83. And it looks like a little bit of change out here. 47.8379 inside the NDX 100. If it can manage to close above that, all that today was a test of support, the oscillator unchanged line. That's all that it was. And that would say all systems are go to the upside in the big four. Like three of the big four are saying, I don't really care whether you want to go to this party or not. We're going to the party, and it ain't over. Remember, difference when we take a look at daily charts and when we take a look at intraday charts out here as well. So stay within your time frame of what it is that you are looking to trade. So hopefully all of that information is helpful in assisting you in watching what the markets do. Now, we always change our opinion when the market gives us other information. So this is based on the information at 1:34 in the afternoon. This is the information we have to go with, and go with it we will. Now, where is the biggest problem? So I see I've got a number of emails here with regard to gold, the miners, and so forth. So thank you for those. Always appreciate getting the emails. Keep those cards and letters coming. And you've got gold trading back $7 right now. So let's take a look at the daily picture, get a feel for what's going on there. I don't know what the Sam heck happened to these candles out here. And it looks like I'm going to maybe, let's put the daily chart out here. I don't know if that has anything to do with it. There we go. That's a little bit better. So if we take a look at gold, it's not a good scene out here with regard to gold today. Well, let's go see if it's a good scene or not. First, let's get rid of that A to B equals C, because that is not accurate. Let's go ahead and turn our market profiles on. Maybe they're turned on. They just haven't popped up. Nope. Let's put those on. Okay, here's the good, here's the bad, here is the ugly. Right now, the price point to be watching today is going to be 1266.70. We're trading at 1266.30. I'm not that too concerned. That too concerned? Are you kidding me? I'm not that concerned that price is just trading slightly below the 1266.70 level. But if we trade down towards our low of 1258, bad news bears. You're below every level of support when we take a look at our market profiles out here. So that's number one. Number two, right, we know the body of the candle is the essence of price. But we also know that we can learn from a wick of a candle. And when you talk about a wick of a candle, well, yesterday is it. Because who was really in control of the market after the election? Aspects that drove gold up into what, the 1343 was it 13 what was the actual high 1338 out there. You can see that it was just simply a continued sell-off. Now, interestingly enough, if we take a look at what gold is doing on the 5-hour chart, and right now I am flat. The miners, we took our profits yesterday. And so if we take a look, here's the interesting thing, and I've been looking for places to re-enter, right? Just in essence, following up on questions that people are also sending in. If we take a look at the last bottom out here, happened to form one of Stevie's price relative strength divergent patterns, as well as singing in the Stevie Wonder the Stevie Wonder tune of the key of G out here, the pitch of the key of G, when it made that seventh wave move down here at about 1 o'clock, 2 o'clock in the afternoon. That goes back on October 7th. Well, interestingly enough, when gold was spiking to the highs on Wednesday morning, very early, Tuesday night, how does that work? I mean, really, folks, how does that work? Do you have an answer? How does that work? What you know, what I know, is it does work. You focus on it, you pay attention to it, and that's exactly what happened. It got to that seventh wave move to the upside when it was making that high. And so, you know, an important bottom, an important top. Where are we in the where are we in the move right now on a 5-hour chart? Well, we're not anywhere near what it would signal would be a bottom out here. So we may have trouble in River City when it comes to gold, and therefore we'd have trouble in River City when it comes to the miners out here. Or many of them. Now, silver's not acting the same way, is it? So you've got some divergence here. Stevie's red line is priced at 1271.50. We take a look at the December contract. Now, if you close back above that, 1271.50, it would be the same pattern that we were looking at inside the NDX 100, in that all price was doing today. It was coming back and testing a level of support. But gold is still below the zero line of its price oscillator. Nothing worse, nothing better for the bears than closing below Stevie's red line, falling oscillator below zero. That's what gold is doing. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 251. S&P's up 11 right now. Composites off about 22 points. And for Danny in Atlanta, hot Atlanta, he would like to take a look at the Japanese yen, specifically because of trading gold. What we have up on my screen here is a chart that I take a look at that compares the Japanese yen. Now, I'm using the Japanese yen futures out here. That's at the bottom panel of my screen. Center panel happens to be Goldilocks, and the upper panel happens to be bonds. So the question is, who controls who out here? Our belief, Danny's and mine, is that it is the Japanese yen currency that really has the priority seating, right? If you get on the wait list, it's going to be the Japanese yen that's going to get that first-class treatment out here. And if we take a look at that correlation, you can see how well the dance steps work. It's not exact. It doesn't always work out here. But right now we can see the Japanese yen, the bottom panel of my screen, there's nothing here to indicate to us that it's not headed lower. So if you take a look at gold and what we just went through, price trading below Stevie's oscillator and change line, singing the key of G at the recent bottom, and then the recent top out here on a 5-hour chart in gold is just kind of a doble G confirmation out here, and bonds too as well. All right, AG, don't know if he's in the Tiger's Den or not, but yesterday we were taking a look at Treasury bonds, and hey, when's the time to put those into the long-term portfolio? And again, he was going to wait for some type of confirmation. We can see by looking at these charts out here, there certainly is no confirmation just yet. Now let's go over to just a larger chart here for Japanese yen futures out here. And as we take a look at it, what we can see is that price is below all TAS market profiles. So, Danny, if you were looking for a support level, or you were looking to say, hey, there is no support level, you've got that in place for sure. Because yesterday, which was extraordinary action out here, we can see that, price ran into resistance at its TAS weekly profile bottom. It actually got up to the point of control, but rejected that area altogether. It said, I don't want to be a part of that party. And then, by the time the day was over, just simply closed below the bottom of its daily box out there. So that is not a good thing. Now, what type of pattern, do you see on here? I see a couple of A to B equals CD patterns. The current one that is in play would actually come back out here to, looks like probably the trading day around September 27th. Take us down into October 28th, and then we're going to use election day high out here, or yesterday's high, early morning, and so on and so forth. We can see that it's made the one-to-one, A to B equals CD. How about that? It's like a perfect A to B equals CD. The problem is, though, the move off of that C point is so explosive. It is not likely that what the Japanese yen is doing is making a 1-to-1 A to B equals CD. I wouldn't bet on it. You've got below the TAS market profiles, you've got an explosive move off of the C point. It says "Ay Calamba," or however you say that, and it says we're headed lower. So that says, hey, maybe it's going to head to about 92 cents. Maybe it's going to be 90 cents. Out here at this stage of the game, what it's communicating to you and I is it is headed lower, and that is not good news for the gold trade or for the bond trade out here, which would mean it's also not good for the mining trade. That is its message. Until we see the bulls actually show up to this party out here, that's the information that you and I have to go on. If we take a look at the continuous contract, let me see if there's anything else. We can go take a look at wave counts and so forth. So let's put this out here on our screen. Let's do a thorough review, right? We spend a little extra time out here to make sure that we know what's going on as we look for these patterns. And if we take a look at wave counts here to the downside, Danny, thank you for asking me to do this, right? You see, if we didn't utilize all the tools out here, we could get snookered. And you don't want to get snookered when we're playing these games out here. So it just happens to be if the Japanese yen is going to form a bottom, which could be good then for gold. And thank you for asking me, because now I've been searching for, okay, how do I get back into the mining trades out there? Still in a silver trade, but how do I get back into these mining trades? Danny, did you know this? Did you already know this and you were just kind of tinkering and toying with me out here? That today, maybe yesterday too, just as extended, that we are in that seventh wave out there. So we are in that now. That alone is not enough to go ahead and trigger some type of buying signal out here. You need to see this confirmed. And you can see Stevie's red line. We're below that today, yesterday, day before. So, Danny, I would just say this. Continue to pay attention to the Japanese yen. Know that today's low, if that gets taken out tomorrow, the key of G extends out there. And when you see that pattern, if I haven't noticed that pattern, which is now not likely to be the case out here, just come knocking at my door. A nice wrap. This is that 2x4 upside my head, and then I'll know that things happen for us, not to us, and then we'll be all set. So if there's any hope for gold or bonds out here, folks, right, any hope for gold or bonds, keep an eye on the Japanese yen or Japanese yen futures out there and wait to see if this seventh wave pattern forms out here. Why? Because just look again at the correlation. Top panel is bonds. Center panel is gold. Bottom panel is the Japanese yen futures. So when Japanese yen turns around, if it does form that seventh wave, we would anticipate that so too would the 30-year Treasury. So too would Goldilocks out there. So we owe a special thank you to Danny in Atlanta, because we now have something that we can hang our hat on when it comes to those. This is great, because now we've just covered, two things that people are wanting to know: how to trade and when to trade. And so we've just given you, the clue as far as what to be looking for out there. Okay, so we can see this looks like it's going to be turnaround Thursday inside of the NASDAQ composite out there, and price in the NDX 100 getting very close to Stevie's red line, that oscillator unchanged line, to say that today was nothing more than just simply a test of support. Now, let's go take a look at, absolute teamwork out there, Mike K., and you're a part of that team. So if we take a look at what's going on inside the VIX index out here, the VIX index today, all that it has done thus far has been testing and rejecting its 50-day exponential moving average. That's bullish, not bearish. That price point, by the way, is 1545. Hey, my show's done in 10 minutes or so. We get off the air. Who knows what happens? But if you see the VIX index close about 1544 today, I can tell you it won't be good. You'll see the S&P sell off, and then that would say that would be continuing in a maybe A to B equals CD pattern somewhere to the downside out here. Doesn't look like that's the case inside the ES 30-minute. But, you and I, look, right, we're doing this. You and I are doing this together while the market is live, right? So it's not like I'm going to the left-hand side of the chart, where you and I can somehow be right all the time out there. We're not doing that. all you and I are doing is utilizing a set of tools and indicators that we use each day to get clarity, right? We get rid of clutter. We get rid of our thoughts, what we think the market is going to do. We just simply step up to the chart and we say, this is the set of tools that you and I use to fly our plane out here, right? You go through your checklist. I sure hope that you want that pilot. I want that pilot going through a checklist every time that the door gets closed, right? So you and I, when we're flying this plane of technical analysis and charts, we have to go through our checklist as well. Ain't going to be an 8 equals CD to the downside in the 30-minute chart here for the ES Mini. We're already back up into that swing point high, so that eliminates that pattern out here for what that's worth. Looks like the VIX headed to 1260 before maybe some type of short-term top forms inside of the markets. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So I don't see any emails out there. Kind of a quiet day in email land. Dow's up 276, S&P's up 14, NASDAQ up 13, Russell's up 24 points. We didn't cover oil. We can go take a look at oil out here. Light sweet crude trading down 37 cents, 44.90. Now, this, in the face of, the U.S. dollar index has backed off quite a bit, right? So we had the U.S. dollar index up at about 98.74 out here. Do you think that where oil trades in the U.S. dollar index is important? If you do, raise your hand out there. I see some people raising their hand. Let's go take a look at it. out here. So let's turn off some of these tools. Let's go ahead and end the session that way. We'll turn off that. We'll turn off that. And because there's a lot of people that do believe, that the U.S. dollar index is trading higher. It's curtains for gold out here, right? However, if we go take a look at it, here is the U.S. dollar index on the bottom of my screen now. And that is, it's trading right now at 98.75. I've got a 10-minute delay on it, but basically about 98.75. And you can see when light sweet crude, that's what we're looking at. Oh, is that what? No, hold on. I'm looking at the U.S. dollar and the U.S. dollar. What the Sam heck? That's not going to accomplish anything out there. Looking at that saying that didn't make a whole lot of sense. Now it makes sense out here. Now we got the top portion of the screen is light sweet crude. The bottom portion is the U.S. dollar index. And as you can see, when light sweet crude was moving higher from we've got Mike and Ormond Beach. We got to go to Mike and Ormond Beach. Basically, folks, they don't be paying attention to the U.S. dollar index moving higher and believing that light sweet crude is going to move lower out there. It's just not the game in town out here. Okay, hey Mike, sorry about that. I didn't realize that you were on the line, and you wanted to take a look at the GDX, right?
Yeah, I'm at work, and during my breaks, I saw that the dollar was up pretty good, and it just started to pull back from what I could see. And I was wondering what your opinion is as far as getting back into like the GDX and maybe some of the gold stocks.
Yeah, absolutely. So it's a great question, and you because you're at work, you probably didn't get a chance to hear it. But one of our dinners out there, Danny in Atlanta, had asked us to go take a look into the Japanese yen because of its correlation to both gold and to the treasuries out here. And what I can tell you is that the following: the Japanese yen futures have now entered what looks like it may be that seventh wave move to the downside, but. It says maybe there is a bottom soon for gold and the treasuries, and then therefore the miners out here, but not just yet. If we were to utilize the daily charts to make that determination, we're not there. It's too early. This says that until that seventh wave confirms, and then it has to confirm and do a couple of other things out here, we just don't have a signal. So I would say now is not the time based on looking at daily data out here. And in the case of the GDX specifically, I believe it's now below, it's below the daily market profile. Maybe 2312 holds a support. I don't know if it will or it won't. It's dependent upon, really, I'd say, the Japanese yen. So I just don't think we're there yet.
Okay.
Okay. So you're looking in the right spot, but watch the Japanese yen. Okay, the Japanese yen futures.
Okay. Thanks a lot, Steve.
You bet. Thank you. That was Mike in Ormond Beach, and that was my apology for certainly not seeing that he was on the line out there. But the nice thing was that was a call. We already knew what the answer was on that, right? So, again, we were back at light sweet crude. Now, I like the resilience here of light sweet crude. We're not going to pay attention to what the U.S. dollar index is doing, right? And to a certain extent, we won't talk about gold in that at this stage here. But unfortunately, though, light sweet crude is just trading sideways in between its daily profile of 44 1/4, 44.22, and 45.52. Break above that, pull the trigger, USO. Folks, stay tuned. David White is up next. Our Polar Bear, Tom O'Brien Show, and Andy Hector bring it on home. Have a great Thursday. We'll see you on Fabulous, Fantastic.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.